talking. I got Hans Albrecht joining us from Gamma Options Solutions. Hans, you know, as we're talking about, it's kind of a shaky couple of days. Are you seeing any new trends develop, anything that's presented as opportunity in some of this chop between yesterday and today's bounce back?
I think the opportunity, Oliver, is probably in the things that have been working lately, which is really different from what we've seen the last few years, right? It's this broadening theme. I know it's starting to, you know, I remember somebody last year sort of said, Hans, you're a broken record. It's all about AI. But now the broken record might be this broadening theme, this move into, if I look at my turbo scanner, I can see these, you know, the strength is really in those industrials and some of the materials and some of those things, you know, even outside of the actual materials themselves, the companies that facilitate this build-out that we're seeing around the world, this is going to be some of the more dependable type stuff that I want to be looking at this year. Things like quanta services, for example.
Okay. Okay. Tell me about quanta, but actually when you were mentioning industrial, I was thinking about FCX, which you talked to us about a couple weeks back, right? And they've got earnings coming up. Part of that metals trade. Give me a quick thought on that one, because I feel like if you're looking for copper and gold and the metals to hold strong, this could be a fun flyer for earnings.
Yeah, and you get a little bit of a few different metals, right, when you play these things. And FCX, we talked about it, and it's had a really great run. And there just isn't going to be enough copper. So I call it my sort of things you can drop on your toe theme. You could, things you can stub your toe on kind of stuff. And I think the world is kind of moving more towards that. There's a real need for these things that we just can't necessarily make more of or pull more of out of the ground very easily. And so we really shifted from a world that was kind of very focused on the sort of digital aspect of things, the hyperscalers, and it's moved into sort of this real world, which is very supported by a lot of the data out there that really shows that we've got this industrial resurgence going on, and it is something that's durable, right? So again, I often mention, people talk about, well, are these things cyclical? Is our memory chip cyclical? No, they're structural. And the build out we're seeing is a very durable growth trend. And so I can see this stuff continuing to go, especially because they've come from a very out of favor sort of outlook to something that's, you know, being rediscovered again.
Okay, I like that. And I liked Noel's trade too of being long gold, which has been really the rock, no pun intended. And then short silver is kind of the speculative a trade to look at the higher beta swinging version of this. But FCX, you kind of sprinkle that in there for an earnings flyer. Maybe you just bet on volatility, right? So you got direction for gold long, direction for silver short, and maybe you just bet on a big move, straddle or something like that, strangle into, you know, a long volatility position into Freeport. Do you hate it? What do you think?
No, I mean, look, it's had a good run, but I think what we've got to keep in mind is that we've gone from really out of favor in some areas of the broadening. And we've had some good rallies, but I think some of the balls in those areas are actually still enticing, right? Because we really haven't built in what I call that re-rating pricing, right? So the possibility that we are going to look at a growth duration, so meaning that all that means is we're going to look at perhaps 1, 2, 3, 4 years of growth in some of these areas, and it's not being priced in. And I think that if you look around, that's happening in a bunch of areas. Look at how consumer staples have done. I reported to some of my clients a couple of weeks ago, I said, listen, consumer staples vol is cheap. I know it's boring. I know it's not the most exciting thing in the world. It's not NVIDIA. It's not all the crazy AI things. But it is cheap. So when you start to combine that outlook on vol compared to things that may have been forgotten, that becomes an enticing trade.
I like the XLP chart. I think it's a fun one. It has been really rocking for the last 2 weeks, but then it went sideways in the last 5 days. So a little consolidation, basically right at the 1 year highs. I'm putting a chart right now on the XLP. Basically 82 was an old level of resistance. So if we punch through there, you think this thing can rock and roll?
I think it can. I mean, this is sort of a fun little thing to watch, but I'm a little bit more interested in where the real growth is. So we talked about quanta earlier. So I'm starting to sort of frame things, or I'm continuing to frame things as there are going to be the disruptors and there are going to be the disrupted. And so we see people, for example, in the software sector, which you've been talking about, you know, look at something like Adobe. It's super, super cheap. Look at the valuation. Look at the cash flow. Yeah, tell me what the cash flow is 3-4 years from now. The market is telling you it does not know, because there are going to be extreme winners and there are going to be extreme losers. And when there's uncertainty there, we don't really know how to value those things. So Google looks like it can do a whole bunch of stuff that 700 other companies it used to be able to do. That's a really big important thing that I think we have to look into this year, is really understanding where the disrupted versus disruptors are.
Really good point. PWR for Quanta, right?
Yeah, PWR. So, think about
It's a
this.
good looking
So I
chart.
don't want to own companies. Sorry, go ahead, Oliver.
It's a good looking chart.
It's a good looking chart, and I want you to think about it. It's kind of boring, but I think boring is beautiful suddenly a little bit again. So you take something like this, is really boots on the ground. It's people going out and maintaining and building out the grid, the electricity grid, very physical things that need to be done as this industrialization sort of plays out. And I don't want to own the utility companies that are charging people, because Trump's going to say, listen, you're charging too much. You can't do that. But guess what? These guys get paid because the industrial build out necessitates them to be involved. And that's how I'm kind of framing things. Who are the dependable, can't live without, non-negotiable sorts of areas? And this is one of those names that I think is interesting there.
I like that point. You mentioned Alphabet, Google over Adobe. Great example of disruptor versus disrupted. The Adobe chart looks miserable, has for some time. I gotta say, my old show a year ago, I saw that one coming, same as you, that this was gonna be majorly disrupted. Even though I use, Premiere for video editing and graphics for the show, there's still a lot that I can do via other AIs. Graphics that I've made that you just plug into Midjourney or sometimes ChatGPT, but I use in my pocket and on the go all the time Google Gemini. And there's a reason why Kalshi says that's going to be #1 AI by the end, well, it's the end of the year now, but that's their #1 ranked, and the chart reflects it.
And that's, you nailed it on the head, Oliver, because that's the thing. It's not that Adobe is a bad company. It's not that they're going out of business. It's that we don't, in the ultimate age of disruption, which is what we're in, we will, over the next few years, we'll have never seen anything like it in the history of markets. There are going to be companies with moats that were this wide that are now this wide, even more narrow is what I'm trying to say, right? You thought they had this sort of massive moat, and they don't. And that's really the core of what we're seeing here in this world of everything being kind of re-rated, disrupted. And I think you cannot forget that. So valuation, not so important. Maybe you want to start looking at, well, how's the balance sheet look? Are they going to be able to battle it out for the next 3 or 4 years? And maybe this is cheap. Maybe it doubles because they figure it out. But we know that markets don't like uncertainty, and uncertainty is what is very much what some of these stocks are dealing with right now.
Your point that you made in our last conversation about the cloud companies that are really getting disrupted, I think you nailed that one, Hans. It's one also that I thought the writing was pretty clear on the wall really a year and a half ago as well, but it took a while to kick in. They went nowhere for most of last year. They never really recovered from the tariff sell-off, and now lately they're getting hammered again. So is this a way to hedge the market? Should we be short something like CLOU while we long PWR and long Alphabet and the other stuff, or is that too much leverage?
Well, I mean, it's a little bit of a sell-off. I do think there's a potential for a bounce here, but ultimately, I think that area is quite challenged. And I think that's part of what the broadening is about, right? The broadening is about this world that has done well for 2 or 3 years, which was fairly narrow. Think of the funnel that kind of opens. It's very narrow at the bottom. And now that world is challenged. There's competition, there's regulation, there's President Trump saying he doesn't like this or that. There's a lot of stuff that is now uncertain about that area. Very easy for investors to say, well, listen, is there no uncertainty, or is there little uncertainty? Well, it's going out into the world and saying industry A, B, and C, or company A, B, and C can now use AI to improve productivity. And that is, without question, some companies are going to harness that and make the most of it. So the market is really just shifting from what was a certainty to now questionable in some ways to areas which is the rest of the world where we think that AI is going to really, really make a difference, and it will.
Yeah. Well, a lot of those software companies seemed like they were ripe for some M&A, some combos. So I think AI is going to facilitate some of that. You've had good eyes on that trade. Love the stock specifics. Thank you, Hans.
Thanks, Oliver.
Good stuff. Hans Albert, CEO, Gamma Option Solutions. Let's do an ETF deep dive when we come back. If you're just catching on to the gold and silver mania the last couple months, you'll want to pay attention because my next guest was all over it when he kicked off his ETF, LENS. Wasif Latif, great macro mind, is